So as long as it's fair, as long as it's voluntary, inequality is fine. Inequality is great. We want those who succeed to be more rewarded than those who destroy value. But in the sense of our current environment, we have really sinister inequality.
If everybody, if the water's flowing and everyone is benefiting, right? Everyone's cup is filled. People are happy, right? They have better things to do than to line up outside of someone's house and threaten to chop their head off.
I don't think we should be setting up guillotines anywhere, and that's why I love Bitcoin. It's the peaceful revolution, right? But why do people want to set up these guillotines? Because they know the system isn't working. It's not working for them, and despite working very hard at many jobs and climbing the ladders, it's still the prospects for retirement, even the ability to afford a home today is just it's outside of the reach of so many very hardworking Americans. The system is not serving them. The system stratifies wealth through asset inflation and in disproportionate access to assets.
Welcome to the Tucson Blockchain Podcast. Today I have on Shayne Mullen from Blockfi. I'm a user of Blockfi. My girlfriend's a user of Blockfi. My sister and stepdad are users of Blockfi, and I'm a big fan. I thought it'd be good to bring on somebody from Blockfi just to explain what it is and why it's such a good product for people to use. I enjoyed this interview, and I hope you do too. Alrighty, and we're recording. Welcome, Shayne, to the podcast.
Thanks, man. It's good to be here.
Yeah, it's good to have you. So, Shayne, you're the you got a pretty impressive resume. So you're the VP of Business Development and Partnerships at Blockfi. So, how long have you been doing that for?
Yeah, so I joined the company about 3 months ago. So been relatively new, but in terms of our speed and growth, I'm slowly becoming a veteran at this stage.
Cool. Yeah, Blockfi is one of the coolest companies out there. So could you tell us a little bit about what Blockfi is?
Sure. Yeah, for sure. So we were founded in 2017 by Zach Prince and Flory Marquez. Zach, actually, funny enough, was my old boss at a company in New York that we worked at. It's called Orchard Platform. It was a data aggregator in the marketplace lending space. So we got very familiar with different types of alternative lenders, more specifically the peer-to-peer space. So working with companies like Lending Club Prosper, some of the student lenders, some of the small business lenders, ended up taking that company and selling it to Cabbage in 2018. But in 2017 and a little bit early before that, Zach had always been, interested in Bitcoin, Ethereum, and some of the other cryptos that were out in the market, more, circa 2015, 2016. Back then he had accumulated a bit of a portfolio and, had a decent exposure, and was looking to get some liquidity out of his position without selling. All right. So effectively looking for an asset-backed line of credit or an asset-backed loan, where he would pledge his Bitcoin as collateral and, somebody could lend him 50, 60% LTV and, charge him an interest rate 12 months. He could use those proceeds, right, for, I think he was putting a deposit down on a house in upstate New York. Really kind of easy concept, right? Because you could own a portfolio of stocks, bonds, other assets that you can take, collateralized exposure from. But back then, no one was offering it. No banks, nobody was willing to really budge on that product. And it's really because nobody understood crypto, right? Nobody understood the underlying fundamentals. No lending group had really come out and been the first and foremost, company to provide this type of lending service. And so that was the impetus for creating Blockfi. He started the business as a lending business for holders of crypto who were looking to access liquidity for, a variety of reasons. And so that was 2017. Fast forward to today, we're still driving a significant amount of, our volume through our lending platform on the retail side, but we've also expanded to institutional lending. So now if you're a market maker, an exchange, crypto fund, a financial institution looking to come into the space, we will lend crypto to those folks as well, or we'll lend USD financing to those folks for a variety of, investment purposes. So we, heavy on the lending side. And then we've also come out with 2 other products. The first is being able to buy and sell. So concept of trading, both retail and institutional. You can buy, I think we have 8 currencies that we support on the platform today. And then lastly, the flagship retail product that really a majority of our users in the last, I would say, year have signed up to leverage is our Blockfi interest account. So with your crypto holdings, you can earn up to 8.6% annualized. And then we pay, that's on stablecoin, and then we pay, down to about 5%, give or take on depending, collateral and type of currency that you have within the system. All of our tools and platform is web and mobile, operated, and deposits and withdrawals are as easy as on any other fintech app that you can think of. So that's where we're at today.
Sure. Yeah. So I got my stepdad signed up for Blockfi, and it was his first introduction to Bitcoin, and it's kind of difficult for him because he had to do a wire transfer to get money to buy the Bitcoin on Blockfi. And I'm glad it was difficult for him because he needed to see how much easier it is to just send Bitcoin than to do a wire transfer. But that's one of the things I love about it is just for there's a big movement, which I'm a firm believer in, which is not your keys, not your Bitcoin. But for the average person, who's just getting started, Blockfi is just like a no-brainer because your money is safe. You earn interest on it. And so there's definitely risk involved anytime you give somebody your money. What are some things that Blockfi does to kind of mitigate the risk?
Yeah. I think just going back to your earlier comment, totally nailed it on the head, right? The idea is that if you own crypto and, maybe you bought some crypto on Coinbase or one of the exchanges and it's just sitting there, right, appreciating or depreciating, the goal for us is you should be moving that crypto over to Blockfi. It'll continue to appreciate or depreciate, right? But you're going to earn interest. So the value prop in that capacity is binary, right? It's you're earning interest or you're not earning interest. So I can totally see how, folks who are just getting into the space would want, to work with a company like ours. In terms of like risk mitigation, right? So, a couple things to keep in mind about our business, right? The first is we're US based and we're 100% venture backed, right? So we never, raised our own ICO or token or anything along those lines. Our capital comes from, Valor, Morgan Creek. These have prominent investors like Peter Thiel and Anthony Pompliano. These are companies that invest in large scale, sustainable fintech businesses, right? So that's kind of number one. Number two is, we've got a team of about 300 employees now. So we're big, we're large. Most of them are, on the product and engineering side, and we're starting to reach, a bit more global, right? To extend into areas that don't necessarily have these functions, but do have the ability to buy and sell crypto. The third is our, on the risk side, all of our assets, most of the assets on the platform are custodied with either Gemini or BitGo. So, we have deep relationships with both of those platforms. They're, effectively going to be covering risk on, that side of the house. And then the last part is we, about 5 months ago, hired our chief security officer, CISO, Adam Healy. He came from Bakkt. He's got a tremendous amount of exposure in the space, and he's building his team out, and they're getting really big. So our security footprint will be, arguably today is one of the best, and it will be the best in the space, come 3 to 6 months from now.
Yeah, I definitely think that you guys are really setting the standard for the space, and I do have to disclose I am a BlockFi customer, and I do have Bitcoin in the account, so I don't want to like make it sound like I'm against it or anything. But yeah, and I suggest it to a lot of people because it's a good starting point. So. You have a good old-fashioned Keynesian economics degree. How was it studying Keynesian economics in school?
Yeah, economics degree in school. I had a minor in environmental science. I wanted to pursue clean energy, like a job in renewable energy. I did my senior thesis on offshore wind turbine economics in Denmark, and I ended up going into the brokerage business on the clean energy side right out of college, effectively brokering clean electricity in New York, and I liked it and realized that it was a pretty interesting space, but I was more, I don't know, my head was more geared towards kind of the financial components of what I was doing. And then I'd always been a technology person. So really where my head eventually went was, why don't I find myself on a path where the convergence of finance and technology really, can be what I create a career in. And where's the best place to do that? That's Bloomberg. They're the largest financial technology company in the world, right? By maybe not a mile anymore, because some of these Ant Financial and some others are pretty huge, but back in 2012 they were enormous, right? 400,000 customers, multiple tens of billions in market cap, private company, and they sold the tools, the financial applications that 80% of Wall Street uses on a daily basis for a variety of different things in the traditional sphere, right? I ended up kind of angling my interest more on the lending and mortgage side of the world, simply because lending, and credit, I thought was really unique, right? I'd always had a credit card. I understood what a mortgage was, but not well, right? Which is one thing that I think society just needs to fix in general, right? Is educating people at a younger age what these things are, but that's a whole nother topic we could talk about. And I realized that there is a huge world of lending and unsecured consumer lending, credit card, small business, that is being effectively disrupted and transformed right in front of my eyes at the time that I was at Bloomberg. And that was this whole peer-to-peer marketplace lending industry effect that took place in, starting in 2012. And it's still, going on today. It's just the element of peer-to-peer has really changed. Are you familiar with the peer-to-peer marketplace lending club space?
Not a ton, no.
Yes, the whole idea, was that, traditionally speaking, retail investors never had the ability to get exposure to personal loan portfolios, right? It was always banks or large investors, right? You and I, we go to, down the street to Wells Fargo, we sit down in a brick and mortar location, we need a $10,000 personal loan, maybe to go put on a security deposit at an apartment or whatever it may be, or buy a property. That money, that $10,000, is always funded by Wells, or Wells would syndicate it, securitize it, and then sell that asset off to Wall Street. And then Wall Street, some private equity firm or hedge fund would own the receivable of that particular bond or asset. And every time I made my interest payment on that loan, the money would just get paid directly to the investor. So what peer-to-peer lending did was it allowed, which is kind of similar to the world of what I say crypto is effectively doing, but it allowed for individuals like you and I to be on the other end of that trade, right? So rather than an investor giving that person at Wells Fargo $10,000, you or I could give that person at Wells Fargo $10,000 and fund it with our own cash. And then we would actually get the interest payments, and we would see the upside in the yield of whatever that particular loan was. So these companies created these massive marketplaces that just connected retail sellers or retail buyers who wanted loans and retail capital who wanted to fund them. And so that was, the world in which I dove very deep into, right out of Bloomberg with Zach, and got incredibly knowledgeable in that space, which has really helped kind of pave the way for my business development and partnership efforts as we scale a company like Blockfi.
Yeah, that's really cool. Yeah, there's a lot of financial tools that are being offered to people that they've never had access to before because of Bitcoin and cryptocurrency. Yeah, one of the things that you talked about is the lack of financial literacy in our communities, and I would liken that. I think it's kind of an epidemic. I'd liken it to before the printing press, being able to read and write was not very accessible to a lot of people. And then this disruptive technology came along and provided access to education and dispersion of information in a way that was never possible before. So I see one of the biggest roadblocks. So one of the things you were talking about is, Zach having issues with the financial industry not understanding Bitcoin and cryptocurrency. One of the biggest roadblocks for people adopting Bitcoin, I think, is the financial illiteracy, because we have garbage money that's wrecking everybody. Once you learn what Bitcoin is, it seems kind of like a no-brainer. And it is a complete paradigm shift. So what was your journey like into getting into Bitcoin and just decentralized money in general?
Yeah, it's a great question. And I think too, like, financial education, financial literacy has to be a focus or a focal point for the future, or we're going to have a lot of situations where folks are either A, getting taken advantage of, or B, not necessarily understanding what type of advantages they have, which, creates multitudes of issues. But, my experience with crypto, I had read about Bitcoin and Mt. Gox, back in, it was probably 2013. At the time it was trading at, pennies on the dollar. I couldn't buy it because I had no clue what was going on. I was not that technically savvy. I continued to follow it. I think the article I read was on TechCrunch, and it was, and I continued to follow it throughout the years. I never purchased Bitcoin because it always was a little bit out of my I think at the time Coinbase, you couldn't buy fractional, and it was always a little bit out of my dollar appetite, or just I didn't even at the time I just didn't have like tens of thousands of dollars in savings, right, to just purchase like 5 Bitcoin. So what I did in 2014 was I bought some Ethereum and read a bunch about Ethereum and the Ethereum protocol, and just application, proof of work, proof of stake, the evolution, and effectively put, I don't know, decent exposure in Ethereum, used that kind of as my wedge into this industry. Got really like into some of the podcasts and following some of these influencers on Twitter, the whole 9 yards. But then it kind of fell off for me. I think I was really looking at getting changing my career and kind of altering what I was doing at the time into not necessarily cryptocurrency based companies, but distributed ledger technology companies. So companies like Corda and Ripple for what they were doing. But I ended up just staying on the path that I was on in traditional kind of fintech, which is a funny to say traditional fintech now that it's evolved so much over the years. But staying at a traditional lending company, right, that provided credit to people, and I continue to hold my Ethereum investment, right, which allowed me to continue to be interested in the space. But professionally, I went into helping freelancers and 1099 employees get access to their pay early in the form of what we call like early wage advances at a company called Quill, which was really interesting business model and a really interesting company because gig economy has exploded right over the last 3 or 4 years. So I rode this marketplace lending wave. And then I jumped onto the gig economy wave, and I've been riding that, until, earlier this year. And now we're on, this enhanced crypto wave. So I've always had my pulse to the market, but, from a deep dive, hasn't been professionally anything until, when I joined these guys.
Gotcha. Yeah, the gig economy growing has been a very, very interesting phenomenon. And I think just what came to mind is the more I've learned about taxes, the more I've learned about how a lot of companies are actually being penalized for employing people. And it is kind of like a growing trend. So like in Seattle, there's like a head tax on people. The role of employers has definitely changed through the years. I think partially due to like inflation and unsound money, but that's pretty cool. So how does Blockfi calculate your interest rates or decide your interest rates on the interest-bearing accounts?
Yeah, I mean it's a compounded interest rate, right? So it's an APY, annual percentage yield, I believe, is what that stands for. We set the annual rates based on the demand in the institutional space. So remember earlier how I was explaining we lend to institutions and we lend to retail. Well, when we lend to an institution, we typically lend at an interest rate, right, that they're paying us that is higher than what we are paying our depositors, our retail depositors. So if you put in, $1,000 of USDC or Gemini USD, you're going to earn 8.6% on that. We'll typically take that and then we'll lend it out at 10 or 12, right? Or whatever it may be. And then you're able to capture the sustainable yield, right? By putting your money in a Blockfi account, we're able to capture margin and revenue so we can keep our business operating and growing and support more folks like yourself. And then the borrower on the institutional side is able to borrow stable coin or crypto at a rate that's favorable that other places are not able to offer to power their businesses and do things with those funds. So everybody in that chain of events, right, is gaining value. And in terms of changing rates, we don't change rates often because we lock in terms with our counterparties at longer durations, right, than some of the other players in the space that you've heard of. What I mean by that is when an institution in that same example wants to borrow $1,000 from us, right, but just let's throw like 3 or 4 more zeros on there, we typically say, great, we can do that, but the term of this relationship is 12 months, right? Meaning that particular loan that we're issuing to that institution, they're paying us back 12% over 12 months. Right. So we know that that 12% is fixed, right? It's never going to change for that particular deal. Therefore, our interest rates are synthetically fixed, right? Versus DeFi and, other players who just mint their own tokens in some capacity to pay interest. Those are not fixed. Those are variable. So that's one of the really, really nice things about our platform. I like to use the term sustainable, right? Because our yields are going to sustain at their levels over time without a tremendous amount of fluctuation at all, because on the other side where we're driving that yield from is locked into longer term relationships. It's a key differentiator of what we're doing, and allows us to continue to pay customers healthy yields, right, through different market environments depending on what's happening in the space.
Yeah, that's a really well. Thanks for explaining that. The compounding interest is probably one of the most attractive parts about BlockFi. So if you sign up for a BlockFi account, you'll get the interest monthly at the beginning of the month. So like if
Mhm.
you're dollar cost averaging into Bitcoin, you're buying it on Coinbase. Don't buy it on Coinbase, buy it on Cash App or something. Swan Bitcoin's a good one too. But so you're putting your Bitcoin in every month or couple weeks or so, and it'll earn interest, and you'll get paid in cryptocurrency of your choosing. So if you want
Yep.
to get paid in stable coins, I don't know why you would, but if you did, you could earn that, or you could get paid in Bitcoin. And that, I mean, that's just a really cool feature. So most people are moving backwards when it comes to interest. Why is earning compounding interest such an important thing?
Yeah, I mean, look, compound interest is what generates wealth, right? I think a good way to visualize it is, for anyone listening, if you go to our website, we've got an interest calculator on the interest products page, and you can actually go on there, type in the amount of crypto that you hold or would like to deposit, select your time horizon, and then we'll instantly output what your expected interest would look like, or estimated interest would look like in real time. So it's cool to see, right? With certain buckets of assets held over a longer period of time, you have that exponential growth of interest. You do not have a linear growth, right? That's, I think, the biggest thing to think about, and that's really where like real wealth management, right, comes into play. It's how do I create an exponential return versus a linear return? And then to your just quickly earlier, we are rolling out ACH functionality in the next like couple months, or like month here, where you'd actually be able to just connect your bank account via Plaid and just buy dollar cost average and buy Bitcoin directly on our system via ACH. Yeah, so
Awesome.
no, you can wire still, international wire, obviously move your crypto over to our wallets, but you'll be able to ACH as well, which is a huge value prop and will be for us going forward.
Yeah, that's great. I'll make sure to tell my stepdad, because he had problems with the wire
It'll be
transfer.
it'll be like 3 clicks for him instead of 6 or 7.
Yeah, so I pulled up the interest calculator. So I'm doing it with 0.5 Bitcoin, which is almost $6,000. For 12 years, you'll be earning 300.
That's monthly.
Or sorry, not 12 years, 12 months. Thanks for correcting me.
No worries. 12 years,
yeah.
you'd be earning a lot.
Yeah, 12 years, you'd be earning a ton. Okay, so 12 months, you'll earn $359. So that's, if you put that money in the bank account and you're holding it in cash, you're going to be earning nothing.
Yeah, I mean 0.06% APY, right? So just think about that for a second. It's 0.6% is really where they're sitting at. So 60 basis points of annual yield is what like Marcus by Goldman Sachs pays in their account. I bet you if you went on your bank's website right now, if you bank with Chase or any of the big ones, or even like neobanks or anyone, their savings account yields are going to be below 1%, right? Ours are 8 times that, which is, it's just a testament to how crypto can offer, right, healthy returns in environments where, we're not correlated to the government printing $2 trillion more in assets and the equity market's tanking. That's not really a correlation that we typically see on a longer term basis. Therefore, the ability to take or create yield off of an asset like this is, everybody should have some of their dollars invested in it in some capacity.
Yeah, no, I definitely agree. And yeah, so the interest calculator, I just plugged in $6,000 in a stable coin for 12 months. You'd be earning almost $10 a week, which totals up to $560 for the year versus a bank account that yields nothing. So again, it just seems like a no-brainer.
Yeah, and then if you wanted to, I was just going to say on the, the interest payment flex piece too, right, that we talked about earlier. super cool. If you wanted to put 10 grand in there, 6 grand in there in USDC, you can select to earn Bitcoin, right? So your cash just sits there. You can withdraw whenever you want, and it just sits there and it earns Bitcoin for you. It just mints Bitcoin at an 8.6% clip. So you can effectively become, use your USD to become a crypto investor without having to spend anything.
Yeah. Yeah. There's just so many good aspects of BlockFi and why I like to tell everybody about it. So probably a question that you get a lot, I know the answer to it, but I'll ask it anyways, is BlockFi FDIC insured?
We are not FDIC insured. Yeah, because we are not a bank.
So some people might hear that and be a little bit wary, but my personal opinion, I think that's a good thing, because what a lot of people don't realize is that FDIC insurance is essentially kind of a guarantee that, the lenders will operate recklessly because they know that there's a potential insurance on their policy. So that means that you guys are a little bit more, are forced to be a little bit more prudent in your lending. And
yeah, I mean, we custody all of our assets, as I mentioned. Gemini and BitGo, both of them have healthy insurance policies on their risk. We've never lost a dollar. We've never even had a defaulted loan, right, to date. So that will continue to be a pillar of KPI that we track to for forever, right? Because that's incredibly important.
Yeah. So where do you see, like, over the next 10 years, things are moving so quickly, so it's hard to make any predictions, but where do you see the future of finance going?
Yeah, that's a good question. I wish I had the answer, right? Could use my answer to invest accordingly. But look, I think cryptocurrency is here to stay 100%. We have already seen very large, very forward-thinking, innovative organizations putting money into Bitcoin for the long-term hold. We are seeing really, really, really smart, intelligent people coming into the cryptocurrency world from the traditional finance world because they see so much value. The way that the government, just any central government today, is operating, not any, but most, in the form of quantitative easing, and more specifically in the US where interest rates are, this is not going to change, I don't think, for at least 3 to 5 years. Stimulus will continue. The effects of COVID will continue to ripple through the economy. And we need a way or a place or an avenue to hedge that risk, right? And make sure that, our money is actually making money and we're continuing to grow wealth in times that are tricky when you think about it from a fiat perspective. So I think there's going to continue to be a lot of businesses that provide similar, like, financial products. And what I mean by that is, when you go to a bank, right, you can get an auto loan, you can get a mortgage, you can get a HELOC, you can get a savings account, a credit card. I think you're going to see a lot of those products being built with digital assets as the core currency infrastructure powering them, and built on blockchain technology. I think that'll be a trend for sure over the coming years. And then I also think you're going to start to just see a lot of this stuff go a lot more digital than it already has, right? Like, the day of going to a bank branch is most likely for everybody for a large demographic is past. I think it's going to ripple into the older generation, but I think Gen Z below that, no one's going to be using a bank branch, right? You're seeing financial technology companies coming out that provide savings accounts and checking accounts to teenagers, to children, right? To young adults. I think they're going to grow up, right, with their bank account and their bank being on their phone. And that's just going to continue to spur more, digital acceptance of things that traditionally might have not been digital. So, in our perspective, riding that thesis, right? If you think that thesis is going to be accurate, which we do, our next product is going to be a credit card in 2021, Q1 or Q2. And the credit card is going to be traditional, right? You swipe, fiat backed, Visa card, BIN sponsored bank, et cetera. But when you swipe, you're going to earn 1.5% back in Bitcoin. So you earn Bitcoin rewards with the card. So we think that's going to be a really unique way also of getting more traditional folks who are interested in the space, using a product that they're comfortable with and have used in the past, earning Bitcoin and then becoming Bitcoin holders and effectively being, introduced to the space in that capacity.
Sure. Yeah, that's a pretty cool product, and a lot of different companies are trying to move that direction. It's been pretty wild to see these tech companies issue credit cards and almost operate like they're heading towards a bank, like Apple with their Apple Card.
Yep. I think you're going to see most large companies integrate an element of fintech into what they do, right? There's going to be this verticalization play. What I mean by that is, take an example of like Home Depot, right? You can get a Home Depot credit card today, but I would imagine companies like them are thinking about is, let's create a Home Depot checking account, a Home Depot bank account, a Home Depot savings account, Home Depot lending program. They have a few of those things, but verticalize the financial stack into an offering that's under the Home Depot umbrella. And now every builder in America has a Home Depot bank account because they buy all their goods there and they get rewards for buying their goods there and they store their funds in it, right? Like those are like kind of the natural progressions I think you're going to continue to see. Apple did it with, Goldman Sachs. There's a very long laundry list of companies that'll be doing this, but you're going to continue to see this over time. And I also think you might continue to see it in the crypto space, right? Ancillary crypto type players who, maybe do things like provide a review site or a comparison site of, hundreds of different coins. And that's what your business model is. Well, what's to say that they won't just operate and build wallet function technology and trading or buying technology and savings and all that good stuff because they already have the demand, right? Credit Karma just launched a savings product. I bet you NerdWallet's going to come out with a checking account or something along those lines, right? These are all things that we're going to continue to see, I think, over the course of the coming years.
Yeah. Cash App.
Cash App. Yep.
Amazon.
Exactly.
Yeah. Yeah. So
and then you're seeing like banking as a service technology is doing really well, right? The companies that actually power the banking apps, right, for those businesses are, exploding with growth because you get one Cash App, right, that goes from 0 to 10 million users in a couple of years, and all of a sudden, if you're the infrastructure that's powering that tool, and you're the bank charter, et cetera, that's like depositing and holding the assets, then you're seeing some very, very, very serious growth.
Yeah, it's just like hard to imagine where things are going to go. I mean, the past 10 years, things have moved so quickly. Most people operate digitally, like very few people operate in cash. And it almost seems like cash is kind of coming to an end and we're moving entirely digital. So
especially in a post-COVID world.
Mm-hmm. Yeah. COVID has just accelerated everything. So from like, I don't know how much you can talk about it, but whenever there's a major shift, there's going to be establishment powers that are going to push back against it. From a regulatory stance, do you think that Blockfi is safe, or are there going to be challenges coming?
Yeah, it's a great question. I mean, look, as a business, right, we have a money services business license at the federal level, right? MTL licenses at the state level and lending licenses at the state level to do all of these practices, right? So we have that, in stone. I think like regulation in this space is obviously a huge question mark, right? Because you have Bitcoin and Ethereum, bucketed as a commodity, right? Currency under the CFTC, and they're the futures or the derivative market for those two currencies are regulated by the CFTC, right? But then you have the SEC, right, coming after some of these other companies that are, issuing securities offerings or initial coin offerings that look like securities. And whenever you have something that falls under the securities bucket, that's SEC owned, right? So, I think a lot of like companies out there are trying to navigate the waters and making sure that they're protected, or at least have the right framework to help regulators navigate, and to be proactive versus an offensive versus defensive, right? I think in any industry that's new within finance, you want to work with the regulators when they want to work with you, and you want to help educate and help inform and help shape, right, how these operations persist. And so, our general counsel comes from the traditional finance space, so he has his pulse on some of that stuff.
Yeah, the regulators are kind of scary, but one of the regulations that has me kind of worried is this thing that's going around called travel regulations. So the idea that that could potentially make it illegal to self-custody Bitcoin, that you have to custody with only trusted registered parties. So that's part of the reason why I'm hesitant to go all in on BlockFi, is because if the regulators come out and say, hey, you guys can't allow withdrawals to unregistered wallets, that could potentially mean that my Bitcoin is stuck and I can't self-custody it if I want to. So have you heard anything about that?
Yeah, it's a good question. I definitely see, kind of from your seat, right, how that obviously plays a massive role in any crypto company you decide to work with, right? We today haven't done a whole lot of product development on self-custody yet, but these things are always in the back of our minds, because we want to be able to support the entire crypto community, not just like newcomers or folks that are comfortable with how we operate today. So I don't have much on it now, but stay tuned. I'm sure there'll be some ideas around how we operate in that world.
Sure. Yeah, and it's not a guarantee that will come, but it is the potential, and I think it's always important to just for consumers to know where the risks are. And for a lot of people, I think it doesn't bother them. This is kind of an issue that kind of hardcore ideological people are worried about, because most people,
and I was just going to say, to your point, like, not your keys, not your crypto, and also like super deep DeFi folks. Some DeFi folks will leverage our institutional desk to borrow Ethereum, right? So we can lend them Ethereum so that they can just stake the Ethereum for DeFi projects. But yeah, not your keys, not your crypto. Not a massive part of our demographic today, but hopefully we can help educate and or like create something for them.
Yeah. One of the things I appreciate is about BlockFi is the educational aspect. So you guys have some platforms which you talk Bitcoin and other stuff, and you coming on this podcast is, I think, really, really helpful for people to learn about the product. Where can people find good education on Bitcoin, in your opinion?
I'm like a huge podcast person personally. So I think like there's a bunch of podcasts out there, including yours, you know, that I think are very valuable in terms of staying up to date with what's going on. One of our investors is Pomp. He's got a great podcast. He's consistently interviewing people who are, you know, leaders in the space within different elements of the space, and understanding their perspective is super helpful. You know, when I can get some time to go through those. I would say like our website resource center does a really good job kind of explaining how BlockFi operates within the space. And then our blog does a really good job of talking about Bitcoin, just general crypto. Think about it as like a crypto 101, like a Bitcoin 101, as well as like what do, you know, traditional or like, you know, subsets of the BlockFi customer, like how do they engage with BlockFi? Like why, right? I think some people, it's, you know, crypto is obviously got to learn to understand crypto, but like why, you know, what's the benefit of compound interest earning yield? Like what should you be thinking about in terms of goal setting or reasons for, you know, investing in the long term? Like why is just general kind of wealth management, right? Something that everyone needs to think about. Retirement, right? Inflationary hedges, like all these things I think are really important to understand as kind of a global picture. But yeah, for me, you know, it's podcast is really my number one. And then, you know, educational content on our site, plus, you know, some of the, you know, news outlets just to stay up to tune is helpful as well.
Yeah. Yeah. Podcasts are one of my favorite, and why I started this, because I've learned so much from Pomp and, you know, some other people in the space. You just get some of the smartest people out there to sit down and have an hour or so conversation. And it's just, I never had access to information, and a lot of people just don't read today.
Yeah.
So be able to like listen while you're driving, or, you know, when I doing the dishes or something like that. So yeah, so you sent me a promotion that BlockFi is doing. So if I'll have it in the show notes, but if you're interested in signing up for BlockFi, there's a promotion going on until October 31st, where you can, when you deposit any amount of money with them, you'll get a certain amount back. So the more you deposit, the more you'll get back, obviously, but there's different tiers. And if you click on the link, you'll see it. BlockFi is oftentimes doing these different promotions, which I got to say, you guys are awesome at marketing. You guys are everywhere. So
Thanks, man. Appreciate that.
Yeah. I get the Brave browser ads all the time. And,
we work well with Brave. Got a bunch of YouTube and affiliate partners going live, like some big ones in the coming months. You know, some other bigger, larger brand sponsorship stuff that you know, we'll do some press releases on. So we're really excited. Things are moving in the right direction. You know, we got a really great team. We've got a really good product, easy to use, adds a lot of value, and you know, I think we'll continue to push into you know, uncharted territories as we innovate in the space.
Yeah, and I think you guys are going to do well because you have a awesome business model, and there's a lot of like DeFi, you know, there's a lot of hype around it, but it can't really compete with I don't know. I just think it's a flawed idea right now, but yeah. Where can people find your work and kind of follow you?
Yeah, I mean, best place to follow me is on Twitter, BlockFi Shayne, SHAYNE. I post some things there, retweet things I think are interesting. Feel free to also add me on LinkedIn. Happy to always, you know, answer any questions in mails, whatever it may be. But yeah, those are probably the two best places.
Awesome. Well, I appreciate you coming on, Shayne, and this is a lot of fun.
Yeah, man, it's been great. I look forward to doing some more in the future, and best of luck with everything on your side.
Thanks. That was a fun interview, and Shayne's just really cool dude, and I was glad to have him on the podcast. But yeah, it's important to be careful where you put your money, to take ownership over your money, not just to trust these institutions because they've traditionally let us down. I personally believe that Blockfi is a good company, but before making a decision, I'd highly encourage you to do your research. And hopefully this podcast, an interview, is a good place to start on your research of learning what Blockfi is. If you click on the link that I provided, it helps out the channel, helps out Tucson Blockchain, but you don't have to. But yeah, if you like what I'm doing, I appreciate your support, and one of the best ways to support me is just get the word out there. Tell your friends, like, subscribe, leave a review, comment, etc. That stuff really goes a long way to building my listener base. And then also you can support me on Patreon, or you can send me Bitcoin. But yeah, thanks for stopping by.